Warren Buffett is a trusted name in investing, and a rare few think he's getting a little long in the tooth. Millennials are investing, and the trend is cryptocurrency. But Buffett has a long history of his distaste for Bitcoin. Warren Buffett speaks regularly to the young generation, and he shares the same advice that has proven time and time again. Today, we'll discuss how Warren Buffett believes millennials should invest.
Just because they can transmit money, our money orders, you can transmit money by money orders. People do it. I hope Bitcoin becomes a better way of doing it, but you can replicate it a bunch of different ways, and it will be. And the idea that it has some huge intrinsic value is just a joke in my view.
Warren Buffett has never shied away from his support of the US dollar. He's known for keeping cash on hand and lots of it. So what gives? He says that he likes to have lots of cash on hand so that we can both withstand unprecedented losses and quickly seize acquisition or investment opportunities. Buffett drafted a letter to his shareholders in 2011. In this letter, a note was printed from his grandfather from 1939 saying, "I have known a great many people who at some time or another have suffered in various ways simply because they did not have ready cash. I hope it never happens to you." This is actually some wise advice for personal finances. As a rule, you should really consider having a reserve of cash as an emergency fund for any unexpected situations, but you should also have your brokerage account cash ready so that you can purchase things you want during a low. Just imagine if you had a cash inventory just waiting to be invested. If you had those reserves of cash waiting to invest when that crisis hit, you'd just have to buy low, sell high, just raking in the great 50% to 100% profits on your investment. Having it all tied up in investments means that you would have just collected nothing but losses as opposed to profit.
When you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced.
Have you heard Buffett's most famous and widely known phrase? It goes like this: "Be fearful when others are greedy, and greedy when others are fearful." He has proven this adage over and over again, as it's very true of the stock market and investing system. The takeaway is that you should avoid the stocks that are trending, because more often than not, they're overvalued. This also seems to tie into his thoughts on Bitcoin. Even better, keep an eye out for the stocks that don't have very many watching them. Check the fundamentals, and if it makes sense, then invest. Buffett always recommends dividends, as do most value investors. Dividends prove themselves to be a great perk to company acquisition, as it usually shows the company's finances are healthy enough to support paying out their hard-earned money. Buffett focuses on companies that have a reliable record of paying dividends and even increasing them over time. A popular tracker for these types of stocks is the Dividend Aristocrats, which is a comprehensive list of companies known to increase their dividends over the last 25 years. Buffett recently announced that the total amount of dividends paid by his position in Coca-Cola will soon have a chance to exceed his purchase price for the stock. Now that is a fantastic return on investment. Buffett is a big-time value investor and is always fishing for undervalued stocks based on their intrinsic value. He calculates the intrinsic value by looking at the company's fundamentals, with no less than the activity over the last 5 years or more. He sets his sights on the return on equity, operating margins, and having little or no debt. He then looks at companies side by side for a comparison to its peers to see if it's undervalued. Note that a crucial part of this is to also look for companies that have some type of monopoly or specialty that puts it in the proper position for future success. This could be technology or management, even though Buffett avoids tech stocks, living by his own advice: don't invest in what you don't know or understand. All of these factors can contribute to intrinsic value. He has gone on record numerous times to say that he likes to buy and hold forever. He's owned many of his positions for over 20 years, which is basically eons in the investing timeline. However, he has also said that this doesn't mean holding a company if the fundamentals have changed. Buffett constantly looks at his portfolio, and if a company loses its edge or superiority, then he will sell or trim back his position. No one could ever accuse Buffett of lacking patience. What he's saying is to invest, not trade. Find companies you like and wait for the right price.
Well, really, when I took Ben Graham's class in 1951, I mean, the whole world was my oyster, because people were not going through the manuals, and you had to. It's easier to get the data now, for one thing. I mean, just with the internet, far easier. And I used to mail away for annual reports and go to the Interstate Commerce Commission, the Public Utility Commission, the Insurance Commission. I went to all those offices and dug through papers, and now it's it takes five seconds for somebody to get the same information.
Many sources have said that Buffett has a list of hundreds of companies that he's looking to invest in, but of course he will continue waiting for the right price and the right opportunity. The Great Recession was the last time Buffett made the most purchases. This was when stock prices tanked. He was able to come up on deals, getting in on those prices that made all his great returns in the following years. What's your opinion on Buffett's advice? Do you have any other nuggets of wisdom to share? Please let us know in the comments, and if you would, consider subscribing and ringing that closing bell to get notified of our next post.